Hello all, my name is Ryan McQueeney. I'm with the communications and marketing team here at Wespath, joined by three of my favorite colleagues from the far left over there. Frank, our managing director of investment management, Quach, our director of public markets, and of course, Johara, our chief investment officer. Welcome to all three of you. Thanks for being on the webinar this quarter.
Thank you, and you're one of our faves too, right?
Thank you, I'll take it, I appreciate that. Today we're going to be talking about something that I think is quite exciting, which is what is Wespath's investment philosophy, and more specifically, we're going to be talking about how our answer to that question is evolving and how the words that we're using to answer that are changing ever so slightly. And so, if you'll forgive me, if you guys will bear with me for a second, I'll set the stage a little bit. So what is an investment philosophy, and why is it important that we define that for our viewers? We've got some things on the slide that are kind of the academic answer to that, right? The principles that are consistently applied to all aspects of the portfolio management process, the central tenets of an investor's approach. To me, it's that guiding principles aspect of the process, right? Answering not just what we do, but how we do it. And so I think it's a good conversation. That's why I'm excited to dive into it with you all today. Johara, I'm going to start with you with all that in mind. I mentioned that we're kind of evolving our answer to the core question of what is Wespath's investment philosophy. And so I think viewers are going to see some new stuff today. As we roll out those new things for viewers or for our investors, for our partners more broadly, why are we doing it right now? Is there anything to the timing of this?
Sure. I think it's important for us to revisit our investment philosophy today because, well, me being a new leader, I think is one. So a lot of the investment philosophy may be new to our audience here, but it's not necessarily new to myself or even Hua and Frank. But we thought it would be important to spend some time on it. So not only am I new, but there's new members of the investment team. We have a new governance structure from the board and committee level. In addition to that, I think it's important for us to just make sure that we're all speaking the same language and that we're operating under a thoughtful investment philosophy. And so in developing new procedures and new policies, it's important for us to kind of align all of that together, and the investment philosophy is a great place to start. In addition, the investment world's always evolving, and it's important for us to evolve with it, alongside it. So as we continue to grow, we're not standing still. We're making sure that we're evolving, whether it's around the technology and information that's coming our way, and just making sure that we're taking all of that into account and really being able to bring the best to our clients.
Yeah, thank you so much. I've nearly 1 full year as our CIO, by the way. Congratulations.
Thank you. I'm loving it, so thank you.
But I do think that's a really important part of it. You talked about all the new faces and places. Hua, as
One
well.
full year.
Of course. Congratulations to you as well. And so I do think it's important. It makes sense that we'd want to get these things in your own words and have truly reflect your guys' perspective on things. So I think that's really important. I feel like we're teasing it ever so slightly at this point now, so we might as well just pull up a slide and dive in. We've got 3 core pillars here. I'm a fan of lists of 3, so I like this. Well, I know you agree with me there. Purposeful diversification through complementary managers and strategies, client-centric approach rooted in mission and values, and embracing research, rigor, and innovation. I know that's a lot of words. We're going to dive into each of the 3 a little bit more specifically now. And Hua, we'll start with you on that. The first one I mentioned, purposeful diversification through complementary asset managers and strategies. To me, those first 2 words, purposeful diversification, are carrying a lot of the weight in this context. What does that mean to you?
Well, Ryan, that is, I think the most important part is that purposeful, that word. Because you hear a lot about the concept of diversification. You shouldn't put all your eggs in one basket. But I think the way that it gets carried out sometimes is that you just have a lot of things. Yeah. And a lot of things doesn't necessarily get you to your goal. Right. And so the way we think about it is like, what are the asset classes? Who are the managers that work together? And we want to make sure that when we hire a manager or use an asset class, that it helps us to achieve our long-term goal. And so, I think one of the things that Johara and I think have talked about so much is this whole style box type of investing. We want to get away from that. Just because there's a box doesn't mean we have to put something in it.
Exactly.
And so
Just because there's a basket doesn't mean eggs have to be in it.
exactly.
Right.
Well, I was trying this out with my husband this morning, explaining the whole concept of diversification about the eggs in basket. I'm like, it's not just having, not having all your eggs in one basket, but it's making sure you put the eggs in the right basket.
Right.
And I think that's what we're trying to get at, is that there are different asset classes, different managers that work well together. We don't just have to have 5 managers because, well, that's diversification. So we want to make sure that we get, the best managers in there that work with each other. I think something else I was talking about is we're not necessarily looking for things that zig when others zag. We're actually looking for things that zig and zag at different times.
Right.
So that's what we mean by purposeful diversification, understanding that anything that we put in the fund is part of how we achieve our goals overall.
All right, I love it. We got zigs and zags. We got eggs in all sorts of baskets.
I know.
We never use bucket filling.
Yeah, if there's one thing we can do, it's stretch a metaphor. So we'll see if we can come back to that at some point. Johara, to me, this first bit of the conversation is also where we can come to the concept of fees for value, which if it's been a year as chief investment officer, I think that's probably the most used phrase I've heard you share in that year of time. We've talked a little bit about what that means to you in past webinars and videos or quarterly investor letters, so hopefully it's really resonating for our viewers already. But how do you think that concept of fees for value applies to this aspect of the investment philosophy and what Quach was just talking about?
So thank you for acknowledging that fees for value is critical.
It's sticking. It's working.
It's definitely sticking with the team. I've heard it repeated, which is great, because ultimately really what it means is ensuring that the fees that are being paid align with ultimately the value being created. In some instances, we see that as negotiating a contract with an asset manager, or the fees Wespath even charges. I scrutinize those fees. But really, it's also about building a portfolio where you're structuring it at the end of the day with the appropriate diversification or eggs in the right basket, and ensuring that ultimately the fees being paid there will generate value. So, for example, a portfolio that also is inclusive of indexing. So obviously, we have a strong belief in active management here, but we also have a belief that indexing plays a role in asset management. There's areas of the market that are efficient, and so that would be an appropriate place for us to index a portion of the assets at a lower fee, getting broadly diversified exposure to certain asset classes. So in building a portfolio that's customized for our clients in ways that factors in active management and passive management, will probably get to you an appropriate place where you are getting value for the fees you're paying, or fees for value.
It's an excellent segue into the second aspect of this conversation, but I did just realize we are yet another set of talking heads talking about the price of eggs these days. So it's congratulations to us there. But I do think it's a good segue to Frank, something I wanted to ask you about, which is the second piece of our philosophy, that client-centric approach rooted in mission and values. We can look at it again if we need to jog our memory on that. But Frank, I think this is a good one for you because you've been with Wespath for over 13 years now. And I know in that time you've had a chance to connect with a lot of our clients and our customers to see the amazing missions that we get to support through our investment work, through building those customized portfolios that Johara was just describing. Could you talk a little bit more about what we mean by client-centric approach and why this aspect of our philosophy is so important?
I have had the pleasure of meeting many of our clients, and all of the organizations we serve are nonprofits.
Yeah.
And their missions and their dedicated staff are really inspirational, I believe, and drive home the importance of our mission as a fellow nonprofit to serve them with investments that align with their values. And so that means not only avoiding certain types of investments, but also taking advantage of opportunities to create an impact and demonstrate really strong stewardship. I've seen how our clients work to maximize not only their time, but their investment portfolio in delivering on their mission. And we want to be their partner.
Right.
And that includes evaluating how to build an investment portfolio that meets their unique circumstances, their cash flow requirements, their liquidity needs, their time horizon, and whatnot. And so that's what I think what we're getting to with client-centric. And there's more than one approach to building the right portfolio. And so we want to give choice and flexibility in our fund lineup around things like active or passive management, as Johara mentioned, global or domestic, private markets and public markets. And so those are some of the ways we think about being client-centric.
Awesome. I appreciate that perspective, Frank. I want to conclude with just one last piece of the philosophy, the third thing on our list of three. That they're not in necessarily a particular order. Embracing research, rigor, and innovation. And Quach, I want to start with you on this one because when we were working internally on getting the words exactly the way we wanted them to be, you said something about this piece of it that really stuck out to me. Could you share your perspective on this element of the philosophy?
Yeah, right. I think when we were talking about this, like we've always said, we're long-term investors. We have a long-term investment approach, and that's true. But I think the one thing we want to make sure we don't do is get stale, because just because we're long-term doesn't mean we don't change or we don't do anything and we don't adapt to what the market's giving us. So I think there's so many different ways that we can help our clients achieve their long-term goals. But just buying something, sitting there and doing the same thing, I don't think is what achieves that. So we think about, markets changing, or there's innovations that just help us be a little bit more efficient or effective with the capital that we're investing. So I think that's where we embrace it. It's like we're always looking to see how we can improve what we're doing and to give our clients the long-term objectives that they're striving for.
I love that. Yeah, discipline doesn't mean stubborn and stuck to our ways, which sounds like an argument I'd be having with my mom. But
I had that with my kids all the time.
These are universal concepts, as it turns out. All right, Johara, as we start to wrap up here, what is your perspective on this aspect of the philosophy?
Well, it's been really exciting just hearing us talk about it out loud. I know we've been putting a lot of time and effort into it. And I think in overall, the most important piece is around the governance structure that we've built and ensuring this philosophy is implemented across the board. So, we've created the investment committee of a diverse group of individuals here, in that committee really is the committee to question and debate the diversification that we talk about. Is it U.S. versus non-U.S.? Last year we had a lot of clients questioning exposure to non-U.S. Well, this year we're seeing opportunities in non-U.S. And it's great for us to stick to our investment philosophy of being diversified and long-term, but willing to evolve. And then client-centric, Frank spoke about that, and our client-centric asset allocation committee is really the committee that our clients are able to leverage in order for us to build these diversified portfolios for them that take into account their risk tolerance, their comfort around liquidity, et cetera. So I'm really excited to be able to have this communicated to our clients. It's been a long time, but we want to be able to hold ourselves accountable and provide significant transparency, and our governance structure is allowing for it. So
awesome. I'll do a sports reference, and our basketball fan viewers will know the phrase "trust the process." But you have definitely been big on process and procedure and governance, and I've always appreciated that perspective. Frank, any last things you'd note on this aspect of the philosophy?
I guess I would just sum it up by saying at both the fund level and at the client level, we incorporate continuous deep research on markets and economies. And we apply the research to build and innovate from a foundation of really foundational principles.
Yep.
And that's both as an organization, I feel, and as investors. And so in the process, we strive to be transparent and educational about how that research is driving our investment decisions.
Awesome. Thank you so much. And thank you all for your perspectives and insights. I do want to bring this a little bit closer to home for viewers as we conclude here and think about a little bit more about what this all means for them. So we've talked a lot about how we all work, what we do, and how we think about investing, markets, economies, things like that. I truly believe the things you just shared and the perspectives you just shared are in action now. And by talking about this a little bit differently, rolling out some new language to describing it, we're actually just bringing clarity and better understanding of what we're actually doing, already doing,
Right.
That's already in place for our clients and the missions that they support. But I want to recognize that it's still new, right? That's a new slide that we showed, right?
Yeah.
And there's new words on that, and there's new perspectives and new people and things in place. With all that in mind, Johara, is there anything you'd want to add or say to the viewers about the new elements, the old elements, the direction we're heading as we wrap up this webinar?
Really, it's just about remembering that we are long-term at the end of the day. These are long-term outcomes, but it's also about us evolving and ensuring that positions that we take make sense. So we may get it wrong at times, but we actually have the data and the research to support wherever that decision was and the structure around it. Truly proud of the evolution and seeing where we've come as a team, as an organization, and seeing that even just how our clients have evolved over the years from what I've learned from the team. And so it's exciting. This is really an opportunity for us to sort of take advantage of opportunities in the market and evolve as an organization. So hopefully I'm excited, and hopefully our clients are excited, and we're willing to answer any questions they have. So happy for them to reach out to us.
And importantly, be on the lookout for more content about this.
Yes.
You know how to plug
More
the
to come.
content
More to
as
come.
the
More to come.
communications person here. More to come on our website, the YouTube channel, social media. Be on the lookout for it. Thank you so much for tuning in, and thank you all for joining me.
Yeah, you're welcome. Thank you.